All right, let's get right into this. We're looking at some source material that lays out an incredibly ambitious plan to build a whole new financial system from scratch. We're going to deconstruct exactly how this venture, Project Sigma, plans to use AI, blockchain, and real world assets to try and totally reshape finance for an entire continent. So the pitch kicks off with this really powerful, and let's be honest, pretty familiar claim. It argues the financial system we have right now is basically designed to lock people out. You know the story. Gatekeepers, crazy high fees, low trust. It's a system that, as they put it, just wasn't built for us.
And that, of course, sets up the big question, right? If the old way is broken, what's next? We're going to explore one possible answer by breaking down this venture, Project Sigma. We'll dig into the vision, the tech they claim to be using, and, maybe most importantly, the end game they're pitching to their investors.
Okay, so Project Sigma isn't thinking small. They're positioning this as a sovereign financial ecosystem. And their target audience? It's super specific, but also absolutely massive. Africa and its global diaspora. This isn't just another fintech app. This is a full-on continental-scale ambition. Now, here's a crucial piece of the puzzle. They don't frame this as some far-off idea. No, they call it an enterprise reality that's already happening. And by name-dropping a partnership with Google Cloud, they're sending a very clear signal. Hey, we've got serious institutional and tech muscle behind us from day one. So, the big question is, how is all this supposed to work? Let's get into the mechanics and break down their core economic model. It's something they've dubbed the Alkoin flywheel, and it's pitched as the engine that drives this entire ecosystem. But before we can understand the flywheel, we have to get our heads around this key concept: real-world asset tokenization, or RWAT. Look, put simply, it's about taking something tangible in the real world. Think of a loan for a small business in Africa, and creating a secure digital proof of ownership for it on the blockchain. That digital proof, that's the token.
And this statement, this is absolutely central to their pitch. You know, in a world that's pretty skeptical of crypto volatility, they're drawing a very clear line in the sand here. What they're saying is, look, our token, Alkoin, isn't like a stable coin that's just pegged to the dollar. No, ours is directly backed by the value of real, tangible assets that actually generate income.
So here's that flywheel, broken down into 4 steps. It all starts with step 1, a user sends money, maybe a remittance back home to family using their app. Step 2, that money gets used to buy those tokenized real-world assets we just talked about. Then step 3, these assets are supposed to generate a whopping 12% annual yield for the users. I mean, that is a very, very ambitious promise. And finally, step 4, a piece of the transaction fees is used to burn Alkoin, which is just a fancy way of saying they permanently destroy tokens. The whole idea is to create this self-reinforcing loop where more users means more investment, which generates that yield and shrinks the token supply, which theoretically drives up the value for everyone. Okay, so if everything depends on those assets generating that 12% yield, how on earth do they pick the right ones? Well, this is where their big technological claim comes into play. They call it the Sigma score. And talk about a bold claim. They literally say they're using Google's Vertex AI to price the future of a continent. The idea here is that their AI can spot value and predict risk in ways that old-school financial models, which, let's face it, often ignore these markets, simply can't. They're calling it institutional-grade intelligence for everyone. And this is where it gets really fascinating. The AI isn't just looking at boring old financial statements. Nope. They claim it's analyzing all this non-traditional data. Things like how fast mobile money is moving in a specific village, or even something they call social trust metadata. You know, that could mean analyzing community transaction patterns to figure out who's reliable. The whole point is to find these hidden gems, these investment opportunities that everybody else is missing. This visual here, it's basically their entire promise in one simple image. It's like a balancing scale or a tug of war. On one side, you have the actual, tangible value of all those real-world assets. On the other side, you've got the market value of all the Alkoin tokens out there. The pitch is that the asset side will always be heavy enough to anchor and support the token side, giving it real, provable stability. Then they introduce this concept, which they call the smash-mouth reality of their model. Get this. They call it the greed factor. And it's really just simple supply and demand. The more people use the platform, the faster the supply of Alkoin gets burned and reduced. This creates scarcity, which, in theory, makes the tokens that are left more valuable for the people holding them.
Now, a venture this big isn't just about building a cool product. It's about building towards an exit. As the source material says, you don't just build to build, you build to be indispensable. And believe me, the pitch is crystal clear about what that end goal looks like.
So they lay out 3 completely different paths to a massive payday. Path number 1, a traditional buyout from a huge global bank that wants their special AI risk engine to get a foothold in Africa. Path 2, get acquired by a tech giant, say a Google or a Meta, who wants to turn this into the go-to financial app for over 1 billion users. And then there's the third path, the most audacious one of all, the sovereign exit, where they actually become the foundational infrastructure for a future Pan-African currency.
So why does breaking down this one pitch actually matter? I mean, beyond just this one company, why is this something you should be paying attention to?
Well, it's because this whole project is a perfect case study for a bunch of massive trends that are all colliding and reshaping tech and finance as we speak. You've got the tokenization of real-world assets, the use of AI for financial modeling, and this huge flood of venture capital into emerging markets. And maybe just as important, it's a masterclass in how to build a powerful story, a narrative of disruption.
And that really leaves us with one final big thought to chew on. We've taken apart their plan, the tech, the economics, the end game, but it raises a really fascinating question. Is the true innovation here the actual financial system they're trying to build? Or is it the incredibly compelling, incredibly powerful way they're pitching that vision to the world? That's something worth thinking about.